Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's going on, everybody? It's Brinks Trades coming to you live on a beautiful Saturday. Hope everybody's doing well. I'm looking here because my screen is here, my camera's here, and so I'm gonna try something different, you guys. I'm gonna do something a little bit different today. So I'm actually gonna go live on Instagram too, and kind of let people know, hey, that I'm online. So I'm just gonna post this video. You guys can watch me. It's really quick, and then we'll go ahead and get into the charts. But while we're doing that, I want to see, where is everybody from? Where's everybody calling in from? And how's everybody doing? So I'm gonna try this. It's a little bit different today, but let's go ahead and try this and say, what's up, guys? This is Brinks Trades coming to you live. And if you guys aren't following me on YouTube, please follow me on YouTube. It's youtube.com/Brinks Trades. And right now I'm doing the live calls where I break down charts going into the week. So if you guys are new and you want to get a little bit more analysis, follow me there. What's up, guys? So recording the video live. The link's going to be up in a second. You guys will see it. Let's go ahead and get into the charts. Let's see what's people going on. I got the dog in here today. Everybody's feeling good. So if you hear some barking, that's what that is. Okay, buddy. Hey, relax. So Justin Dixon says, "Tops, my man. What's going on? What's good?" Who else is calling in and where are people calling in from? Let me go while we're looking at that. I'm gonna go ahead and get the charts up. And then, guys, if this is your first time watching, this is again, my name is Brinks Trades. I am the resident indices analyst for the Trading Up podcast. So basically what I do is I have been a day trader for about 10 years, and I break down started in the Forex industry in March of 2015. So coming up on a decade, I've had the opportunity to spend a lot of time honing my craft, honing my skills across a bunch of different markets, whether that be Forex, indices, futures is now the market that I've transitioned to, right? And so what I do here is I break down, a few different charts every week and give you guys some little bit of analysis on what I think the market's going to do basically for the next upcoming week based on how our markets played out last week. And so if you guys are new here, again, please lock in with me on all social media platforms. Again, brinkstrades.com. I'm sorry, Brinks Trades on social media and youtube.com/Brinks Trades. And that's where I do a lot of my updated analysis. I actually have a free mentorship going on right now that is basically kind of like breaking down my style of trading for the people that are interested in this. So let me go ahead and get my screen shared and we can go ahead and break into the charts. Again, Justin, thanks. I appreciate it, man. Love the analysis. Love the analysis. I appreciate it. And so, yeah, I mean, really just, I think a lot of times, one of the things that I want to do as a trader is, I've seen a lot of times where people are looking at this industry and it just seems like there's a bunch of people who are not legit and, scammers and that type of thing, or they're posting profit shots and they don't really give you a process and they want to sell you a course and they want to sell you a lot of things. And what I want to do is kind of put some transparency back in this industry, right? And I want to make it so people can really look at trading as an opportunity to really have an income or side income and really grow some accounts here. And so what I want to do is really just put some transparency back in the space and really show you guys that this is actually a viable opportunity to make a career, have a career. So again, Justin, appreciate the comments and the sentiment. So let's go ahead and get into the charts. know it's a little bit behind schedule for today. So if you guys are watching, obviously you guys know, or if you've watched before, obviously you know that the first chart that I do is dollar. And the reason for that is because if you can break down dollar, then you can really get a good understanding of where you think the rest of the currencies are going. So currencies and indices, the rest of the market is going to go because dollar is king. And so we look here. I'm going to kind of zoom back out. There was a couple levels that I wanted to see, respected last week. So we're zooming into this current price action here. This is kind of our last. This is the daily time frame. So this is kind of our last 5 days of price action. And so if we're looking here, I can see a couple of things. The first thing here is the fact that our dollar analysis coming into last week, what we wanted to see is price really hold this fair value gap. So coming into this zone, I drew out this level and said, hey, I want to see if price really retest this fair value gap on the way to higher prices. And so if we're looking here, actually, hold on, guys, give me 1 second. My camera, my computer looks like it's giving me a weird notice. Let me do this real quick and then come right back. Okay, cool. Let me turn this camera on. All right, so basically what we wanted to do here, and when we look at dollar analysis for last week, if we go back 5 days to Monday, what we wanted to see is really just the market come back into this fair value gap, retest this, and go to higher prices. Why is that? So to be honest, we're on a very bullish run here. And so last week's target, even before last week, we wanted to see the market really come and take out these highs. We did that, coming into this past week. And so the thing about a run is that you can't once you take out like a level like this, you can't necessarily automatically think the market is going to reject and come back down. So what do you have to do is you kind of have to anticipate the market's going to continue to go higher. But at the same time, we are in the middle of a BISI, right? Or I'm sorry, a SIBI fair value gap. So there's a lot of kind of like, I guess, like conflicting signals that we're getting. And we just don't really have, a great idea on price action. So like in the long-term picture, I'm getting conflicting signals, but we can't really bet against the current trend that we're getting. So ideally, I think what's going to happen long-term is we're going to come up here and take out this target here at 407. So that's kind of what I was seeing coming into last week. And so because we don't really want to bet against a current uptrend, right? It's like trying to catch a falling knife. We kind of have to anticipate price to continue to go higher, but then also kind of, be prepared if it doesn't. And what I mean by being prepared if it doesn't is by saying if it starts violating, liquidity markers and things that we think that price should continue to respect on the way of an uptrend, like a break of, if we see like a break of structure with a old low being taken out or a fair value gap starting not to be respected, then we're going to start to really kind of take a step back and say like, maybe we should continue, or start to look for a trend change or, a bearish market, right? And so basically until that point happens, we can't really do anything differently. So with this being said, ideally what I wanted to see the market was price come back down into this range. We'd already tested this fair value gap once on Friday, so we might not have gotten that level, but ideally best case scenario coming down into here and then taking things higher. So over the last 5 days, what do we get, right? So just speeding this up, we came back down, we retested this gap. There was a good second, and I actually put this in the chat, that I thought this might not hold. And I thought there's a really good chance that we could, continue to go down. But if you look at, basically the candles of this body respected that fair value gap, or the bodies of these candles respected that fair value gap pretty effectively. But that wick did scare me for a second. And I actually put in the chat, I think we might see a counter trend week. because of that. But once we closed Wednesday, making higher highs, everything was good. So we ended up taking out this primary level, which is our primary target, and actually running back above the old high here. So what happens next, right? So what do we want to see happening next for this next week is, if you notice, we didn't respect this level here. Sorry guys, I keep having a little bit of technical difficulty with the camera, so blame StreamYard, but hopefully you guys are still here and still following along. Put a comment in the chat if you guys can hear me clearly. Okay, so anyway, like I said before, our main target that we wanted to see hit here was this level, this upper end of this old gap, and this high here at 107.96. We ended up smashing that, but we, severely closed below this gap. So what do we kind of have to anticipate now? Well, there's a few things here. We inverted this weekly gap, right? It's meaning that we pretty much did not respect this weekly CIVI, which is a good sign that if we want to see the market continue to run higher. So what am I looking for this upcoming week? Well, a couple of things. So we could see the market just on a weekly time frame perspective. We could see the market. Actually, we do want to see the market retest this area that it just broke out of. So basically, when you're evaluating some fair value gaps or higher time for fair value gaps, especially, you kind of want to think about this as the idea of the market resistance turning into support. So it's the easiest way to kind of understand. It's a lot more complicated than that. And if you guys are in my mentorship, either the paid one that I've been working with you guys for about a year now, or the most recent free mentorship, you guys know it's a little bit more complicated than that. But for the conversation here, we can think of this as kind of like resistance turned into support. And so what am I looking for coming into next week on dollar? Well, I think I want to see these couple of things happen. There's a chance we could just shoot up, right? But I'm looking for really the market to kind of give us a low. And I'll be looking at two areas, which will be the high end of this fair value gap at 107.20, or this volume imbalance here. What is a volume imbalance? A volume imbalance is essentially just going to be a gap in between the two candles, right? So I'll make this black so you can see it. But if we zoom in on this weekly candle, this weekly time frame, we see there's a gap between where this candle ends and where this next candle starts. So I'll be looking at one of two levels. Here at the top end of this old fair value gap to test, or this volume imbalance here, right? And so this is a really higher time frame picture. So what can we expect potentially in the lower time frames? Well, this could be a counter trend week, right? We could see the market come back into this zone somewhere where we could be forming a fair value gap somewhere around this range and this top end on the daily time frame. And then Tuesday, Wednesday, and Thursday, we're going into taking prices higher, right? Or it could just be an entirely counter trend week where we come back down to this range, which represents that weekly volume imbalance that I just showed you. I'll make a note there. and kind of playing with that area and then going higher, right? So ideally, we're still bullish, right? There's no reasons to be bearish here, right? We had a very strong rejection of this fair value gap, which is now an inverted fair value gap. If you guys know me, you know I like to color code things on my chart so I can see things, and I just like to kind of have different colors associated for different things. And for me, orange represents an inverted fair value gap. So, and that just means it's a fair value gap that did not get respected. But we didn't want to see it respected because we wanted to kind of maintain this higher bias, right? So I think long term we could see us coming up here and making new highs on the dollar. That's a very long-term target. But really for this week, what I'm looking at and looking for are going to be two potential levels for us to run to. Obviously, the high of last week at 108.13. There's also a secondary level that if we could hit it, I don't know if we'll hit it this week because of the holiday and stuff, but there's a volume imbalance up here. And then obviously these highs that we see up here, which is pretty low resistance liquidity run here with these lower highs here. So I think these are kind of easy targets to kind of see and call out over the next few weeks, but really kind of depends as far as like the pullback this week and where we think the market could run to on a low end. I'm looking at the high of this gap and then down into this volume imbalance and anything in between these two levels. I think once we start to get lower here, we could see a deeper retrace. We could even see the price come back into this gap here, but I doubt it. I think we're very bullish. So if it does happen, then it's just going to be a week that I probably will either take an L or not be in the market. So that's with dollars analysis. So our bias on dollar is higher. So let me go back to the comment section and see what's going on. This is dollar. So someone asked what chart is this? This is dollar index. And again, if you're new here, any good trader, especially if it doesn't matter if you trade currencies or indices, you should be looking at dollar to get a better analysis of what you think the market's going to do. Everything responds to dollar. Everything responds to dollar, right? It doesn't matter if you trade indices. It doesn't matter if you trade Euro USD, USD JPY, all of these indices, all of these major markets, Euro futures, right? Like all these markets are tied to how the dollar is performing. So if you have an understanding of how dollar is moving or what the expectation should do, then it kind of gives you another bias that you should have going into next week. So with that being said, let's go ahead and go into Euro futures. So if we look at Euro futures, again, if you're not familiar with the futures side of things, it's very much the same thing as Euro USD, right? So Euro USD and Euro futures are pretty much identical. The numbers are a little bit different because the volumes will be a little different, but it's the same thing basically. So what happened on Euro futures over the past couple of weeks, right? So I'm gonna get rid of some of this stuff here so you guys can see a little clearer. Oops. Get rid of this. So what happened over the past couple of weeks, right? So we saw the market has really just been in a decline. I mean, we've pretty much been in consolidation for like the past 2 years almost. This is like November of 22. So we've really been ranging, making a high, ranging, making a high, low. Like we've been in this consolidated choppiness for about 2 years on the bigger time frames. This is the weekly time frame. So what happened over the past couple of weeks, like the past 3 or 4 weeks, is we really have taken out this low and traded back down to this old civvy here. I'm sorry, this old BISI here. This should be green. Right. And so what happens next? Well, over the past couple of weeks, we traded down to the bottom of this, hit this and respected it. Now, with this being said, there's a couple of things here. I feel a lot more comfortable taking shorts on Euro if we fail to respect this, right? And I can't really bet against this. I don't really have a long-term directional bias on where I think Euro USD or Euro futures should go. There's a couple things here that I'm noticing. Again, this trend line liquidity right there, right? So a low resistance liquidity run right there. So we could come back down here, but technically this is a BISI, right? So we think that BISI should go up, right? When price comes into these zones, they should reject and go higher. And so what I don't want to do is keep shorting this while we're in this gap. I want to get some type of bearish confirmation, and I want to see this break first before we continue to go short. So we kind of wicked down here, wicked off of it. And I really just want to see the market not respect this gap and really get a weekly close below this gap, or at least a daily close, before we start to look for more shorts. With that being said, if there's a really clear short, like a short setup on euro, then I might take it. But ideally, I want to see this kind of close weekly outside of this range before I continue to go short. And so let's go down to the daily time frame again. Same thing, right? I mean, we wicked off of this low. If we look left, there's really nothing here that levels, as far as levels that we've taken out, that kind of catch my eye. So I'm kind of back to that idea of just like, I want you to see the market run lower, right? I want to see the market continue to run lower before we, and really close outside of this before we go. And again, it's not this simple in theory, but you can kind of think of fair value gaps as like support and resistance, or the truest form of support and resistance you'll see in the market. So ideally, I'd like to see the market really come back out, retest the zone, whether it be here or here at the entry or the midpoint of this, some level, and then look for opportunities to continue to go short. On a daily time frame perspective, though, the level that I will call out is this imbalance here. And it's 1.0504. So ideally, we could see the market really run for this level. Obviously, if we trade into the zone and we take out this high here at 1.06205, then we most likely will, to break a structure after grabbing liquidity. So we'll probably continue to go up. So ideally, that's what I would love to see. This in a best case scenario is the market do something like this and continue to go down. But I would say if we invert this, and potentially even if we invert this and take out this high, then we're probably going to go back up again. But I'm leaning towards this happening for this week again, because one, you don't want to bet against the bearish trend that's happening. You don't ever want to try and catch a falling knife. It's just not a good idea. Or, really kind of take shorts or take longs in a market that's been short for, this was the beginning of the month, and this was in September. So it's really been like almost 2 months of just price action just falling, right? So when the market has higher time frame objectives it's trying to get to, you can't really try and bet against that, or you will lose everything. So ideally, this is what I want to see. So if I just hop down to the 4 hour really quickly, we might even come back into this zone. So seeing how we respect this fair value gap here as well. I really want to see how that level reacts. I'm just going to make a note. It says 4 hour VG. So ideally, I want to see the market really come back into, if I had a best case scenario, it would be this range right here. But ideally, we could see this as well. So I'll be looking for the best opportunity at 1.0506, and then again, kind of evaluating over the Monday, Tuesday, how we react to this gap, because that'll kind of let us know what the week will look like. So that's what I see on euro. Let me hop to the comment sections and see if there's anything here. Nope, nothing. So I want to go to the let's go to euro. Let's go to pound futures really quick, and then we'll go into indices. So again, same thing here on pound. We're bearish, and I think pound is actually a little bit better setup than the rest of them. It's a little bit more clear to me, at least. So what happened over the past few weeks, right? So we ran up, took out this old high here, right? Ran this level of buy side, took out this high here, and then we're pretty much going back down. So what do I see here? Low resistance liquidity run here, which means that this could be an easy pick. Really grabbing the sell side underneath all these lows. I do see this fair value gap sitting here. So not only is this a fair value gap, this is also a breaker. There's a lot of overlapping things here, right? So breaker, order block, fair value gap, right? It's kind of like a unicorn setup. So if I had to pick a best case scenario of what I want to see happen over the next few weeks, I think we're coming down. I think we're breaking. I think we're definitely going to continue to go lower. And that kind of lines up with the analysis that we're seeing on everything. So I think we're definitely going to come lower down here, at least to this low here, over the next few weeks. Bam. But we also could run into this order block here and this busy. So somewhere between here and here is where I'm looking long term for price to run down into. Yeah, the low end of this is that order block, so I'll just make a note of that. But so ideally, I think this is kind of what's going to happen over the next few. I say few, but this could be like few weeks or so. Like between maybe now and the end of the year, start of next year. I think we'll run down here. The question is, are we going to come straight down, or are we going to come back up, fill this fair value gap, and reject and keep going down? This would be the best case scenario for me. This is what I would love to see happen. So even if it takes another week to come back up to this gap and then, just rejects between now, here, and the rest of the year, that's what I would love to see happen. But ideally, as long as we stay below this gap and this low here, this order block, this breaker, then I would be very, very happy. Just from a confirmation standpoint, I think this is what I would want to see, is price really coming back up into this zone one more time. So this kind of overlap between this breaker, this fair value gap, and this order block here. So ideally, I want to see the market come back into this zone, and I'll be watching that. I'm gonna make a line here. It just says breaker. But if you're asking me if this is bullish or bearish, I think this is clearly bearish. There's a lot that the market's going to do with this, and I think this is a big time frame setup where you can definitely kind of cash in, hopefully. So hopefully this makes a lot of sense to you guys, but I have like 6 arrows drawn in the same direction. But let me get rid of this and do this instead. Ideally, I want to see this break and really not respect this at all and come down. So ideally, that's what I want to see happen. Best case scenario, we come back into this city. Worst case scenario, we don't even go back up there and this just stays open, which I'm cool with too. It's just price retrading back to the gap and rejecting is kind of like a double shot confirmation or double confirmation. So ideally, that's what I want to see here. 1.2693 on the pullback level. Again, not sure if we'll get that, but best case scenario there. So let's go ahead and go to the fun stuff. Let's go to NASDAQ, NKZ. Some people might be wondering why I removed these off of my charts. Well, I just have been focusing more on currency futures. To me, that market is just the easiest one you can trade. If you're new to trading, like forget what everybody else is telling you. Every so many years, there's a new chart, there's a new trend, there's a new style of trading that people like kind of all flock to. And right now, everybody's trading indices, everybody's trading NASDAQ, and that's cool. It's a very volatile thing. You can make thousands of dollars. I've had $10,000 trades, $5,000 trades, $15,000 trades on NASDAQ all in one day. Like obviously not all those in the same day, but like, I've had those moments, those individual trades on, obviously individual days, and had big days on this. But it's also a chart that you can just as easily as you lose it, you can, make it, you can lose it very quickly. So like, there's always going to be a trend. like a favorite chart that everybody's trading or the popular one, and right now it's indices. But trade the one that just makes the most sense to you. You can see it clearly, and it does not invoke your emotions as much. Like the one that you're the calmest trading is the one that you should be trading, to be honest. Okay, so weekly time frame on NASDAQ. Sorry, excuse me. So over the last couple of weeks, we took out this high, right, and then we rejected away from it. We're kind of in the same place that we were last week, just a little bit, higher. Ideally, what I want to see here is a couple of things. I think long term, I am bullish. This was a very strong rejection over like 5 days, like over a week of price action, just straight down. Ideally, what I want to see here is this invert. So this is how I will be playing this gap. So I need to see. So there's a couple things here I like, and there's a couple things I don't. The first thing is things I don't like is in order to make the case for bullishness, things I don't like are the fact that all these price candles were staying below consequent encroachment of this gap. Make this red so you guys can see it. Oops. That black, and then make this red. There we go. So ideally, we were staying below consequent encroachment up until this. This is a good sign that we broke through this over the past couple of days. So I didn't like up until maybe Friday we were staying below that, but now that we're above this, it's a good sign. Ideally, what I want to see here is the market do something like this. Again, using this as kind of like resistance turned into support. And I want to see the market do this, really continue to just run for this high. Again, the secondary level is going to be the secondary gap here. So if you are very cautious on NASDAQ, I would probably wait till this inverts up here. Whether it be coming back down here, or we get some strong sign that this is going to reject. And then I have to take it to the highs, all-time highs. If we get to Tuesday or Wednesday, probably Monday or Tuesday, to be honest, because I don't think the market's going to be that active on Thursday and Friday because of Thanksgiving. If we start to really get signs of us rejecting from here, then this is probably going to be a continuation play. And again, things that I don't like is how quickly we rejected from that high, right? Oops. We haven't fully really broken structure on this daily time frame yet. This was just a very strong rejection. But the fact that we couldn't get through this high really was kind of alarming. And then just that strong rejection from there. So if I had to guess, I would like this to continue to go up, but I want more signs of bullishness in the higher time frames before I can really commit to the idea that this is going to continue to go up. So just again, the easiest way to kind of see if your bullish idea is being respected is your liquidity markers for bullish time frames should be, or for bullishness should be holding like this fair value gap here. This green, it would be green, but it's red at this point. So like these levels are holding, right? And then you'd start to see bearish ones not be respected, right? So ideally, if this inverts, definitely this first one, but the second one too. If it inverts, then I'm definitely looking at this high. Whether we'll get that this week, I don't know. I'm not sure, but this is kind of what I see. There's a lot of stuff going on this week. This is actually a shortened trading week because of the holiday too. So if you live in the United States, Thanksgiving holiday is Thursday, and then usually people are off anywhere from Wednesday through Friday. So it's going to be a very short week for stuff going on. So what's going on not NASDAQ, but let's go to let's go to the comment section first. Tony Gold. Hey, what's going on, Tony? Hope you're appreciating this. And you gotta love like the weeks on these calls where it's a holiday week. People usually don't come on. So it's kind of why there's less numbers than possible. So, or less numbers than usual. So again, if we look at This is ES. This is actually the micro ES. So same thing here. If we go to the weekly time frame, we took out this high, and I actually thought ES looked the best out of every chart because we inverted this gap. But if you look at the weekly time frame, we really respected this order block here. So really happy to see that. A little bit more confirmation. And then we also inverted this fair value gap too. So this CIVI, if I had to draw this over, I'll delete it in a second, but if I had to draw this over just to show you guys, we inverted this. That's a really good sign. So ideally, and we also, it looks like we also inverted this one too. Did we? Just shy. So, but once this inverts, if this inverts, right, then I would be 100% on bullishness opportunities for dollar. I'm sorry, for ES. So ideally, I'm really watching this fair value gap that starts around the 6,000 level to see how we respect it. The minute we get a strong close above this, I would start looking for bullish opportunities if it was me. Last one that I want to look at is YM, which is again Dow Jones. If you trade Dow Jones, this is beautiful. So this is probably the best scenario out of every single one last week. It came back down into this old fair value gap, which was good that we even seen one of the fair value gap because it kind of gives us another level of confirmation. So again, we traded back in this order block, traded back into the fair value gap, and took off. So going into next week, what do I want to see here? It's going to be it's not going to be ideal for this week. It would have been a better situation to trade last week at this low. But ideally, I just want to see the market really run out and take out this high. It's not a lot. It's not a lot, but I think the market could run for that pretty quickly, pretty easily. And so what do I want to see here? I mean, best case scenario, we do something like this and take it out. The market also could just open up and run straight for that. If it does, then there's really no trade for me. I'm not going to trade this anyway. I don't trade, US30. Y'all can have fun with that. I mean, I'm good on dirty 30. So if you want to trade, if you were looking to trade that, that's kind of how I look at it. I'm obviously not advocating that you guys do trade that, but I'm just saying it's how I would look at it if I was. Best case scenario would be us coming back down into this gap here. I'm tired today. And then taking out this high, right? And so 44,000 is the one. So that's pretty much everything for, I'm bearish. We got bullish on dollar, bullish on these indices, and then bearish on pretty much any currency future. So I'm also going to look at a couple more here because there also might be some better situations than the ones that I showed you on currency futures. So this is Australian futures. This is again the same thing as AUD USD. Again, we're kind of in this very same thing where it's not as clean as it is on. It's not as clean as it was on dollar, on GBP USD or pound futures. But ideally, we're still bearish here. I mean, we took out these swing highs, we inverted all fair value gaps, we traded back into this fair value gap here. Right, so it should look very much like euro. Right, so we came in, took out that old high, swung low. Very, very kind of standard stuff here. We're getting lower lows. Ideally, I would be looking at a couple targets here. The first one would be this one here. that I would want to exit at if I was trading this week. This one, since this one's also very close to this one, I'm gonna have this listed as a conservative target, and then I would imagine if we come here, we're probably gonna run through that low too. So again, if you're trading AUD USD or futures, Australian futures, then this is probably the low. If you are looking at GBP, let's see, yen futures, again, same thing here. Well, let me look at this one. Let me come back to this one. If you're looking at Swiss franc futures, same thing, right? So very much think that we're going to probably get a run below. A run below. And I would say this is kind of like the sell side target for this week. So ideally, breaking this down to a daily, something like this. Right, so something potentially trading back up into this zone here. And I think that's it really. Oh, New Zealand. So I've been trying to kind of make more time for these. I think we're just trading to this target. Yeah, I think I did this. I did this a couple days ago, or yesterday. I want to see the market eventually run to 0.5774 on New Zealand dollars. If you're trading New Zealand, that's kind of the target level. Let me go down to the 4-hour. So best case scenario, something like this. I could see us coming back into this range, kind of clearing out this buy side, sitting above this old high, especially since it's right below that fair value gap, and then taking things lower again. So I'm going to actually do a breakdown on all these because I'm actually transitioning. I don't want to say transitioning, but I'm trading a lot more Euro futures and a lot of currency futures now. I like the fact that the currency market is more regulated. Obviously, the futures market is more regulated than the forex markets, which is kind of the reason I jumped to futures to begin with. I also think that this makes a lot more sense for my students. I think sometimes I can look at NASDAQ and I can look at these indices and kind of pick things and really find bits and prices of action to take trades on. But I think it's a lot easier for my students to look at something like this, especially with the way that I teach it. So again, if you guys are in the mentorship, the free one that's going on right now or a paid one, chime in and let me know, but I think that there's a lot of opportunity, more opportunity for the beginner trader in currency futures. And to be honest, like if you're a trader, like a lot of times people get hyped up on trying to trade the fastest currency, like, or the fastest moving, the most volatile. Like people love US30 because it trades because it moves like crazy. And, when you win the wins are big, but it's cool. And that's cool. But like, I think it's better as a trader to have a firm grasp on something. If you know what something's going to do 100% of the time and you don't feel emotionally like, all thrown out of whack because of it, I think you can actually, you would do better to trade those, even if they're slower than something that moves a little faster. So definitely dabble, definitely try things out. But my opinion is, if you find something that works for you, and it's like you understand it, you're not thrown off emotionally when you trade it, then you should definitely stick to that. So, and again, for my students, I think, this currency futures are probably just a better option for them. But again, if you guys are in the mentorship, the paid one or the free one, if you're in here today, put your thoughts in, maybe it'll change the way that I do things for the future. So anyway, so that's kind of all I have for you guys today for the outlook. Again, bullish dollar, bearish currencies, and then bullish indices is what I'm seeing. So hopefully that makes sense. I'll stay on for a couple minutes for any questions if you guys have any. And again, I want to plug a couple of things really quickly. The first thing that I want to plug is, while people are typing in questions, if they have any, the first thing that I want to plug is the trading. Well, actually, I want to plug this. This is going to be pretty coming up next week. If you guys are familiar with me, obviously I teach in person and online as well. And so next in December 14th to December 15th, and I'll probably talk about this up until then since we have like 3 weeks till this happens. I'm actually really proud to announce that I'm going to be a trader teaching for the Level Up Institutional Summit. So this is put on by a good friend of mine, Chris Munoz. He's a really great trader himself, and he has a community that is really thriving and stuff like that. And so, he's putting on this summit, for traders. And so if you've ever been to like a Forex or trading summit, a lot of times what happens is these people are on stage and they're talking to you as people that have made it, right? And people are asking them questions about how they did it. And it's kind of like, just like showboating on stage, right? And no disrespect to anybody that's ever been to any of these or even been a part of them, but it's just not helpful for people that are traders. It's inspirational, right? I think of some summits that have happened in the past. There's been like Forex summits and other trading summits, not just them, but it's really just a bunch of people there, and they're asking people on stage, how do they do it? But they're not really giving them anything other than motivational advice and saying, hey, you can do this too. We think that's not effective. So we think that, if you really want to learn how to trade and you're paying a lot of money to go to conferences and things like that, you want to change your life. You want to be able to get skill sets that you can really walk away from and saying, okay, cool. I came to this event, I learned something, and now I can apply this back to my own trading, right? Other than just like motivational advice. Very rarely do people pull out charts at these things and start breaking things down. So what we're doing is we're doing something a little different. We're doing what's called the Level Up Institutional Trading Summit. And what this is going to be is a 2-day summit down in Miami where you guys can learn from us directly. And it's not just us like stunting on stage and telling people that we're good traders and, trying to build a following or whatever. It's actually us walking through for 2 days all of the strategies and all the things that we do when it comes to trading, how we look at the markets. I think I will be looking specifically at the currency futures markets. Chris will be looking more at NASDAQ. Again, a lot of the same concepts, a lot of the same ways that we look at the market are the same. And so just really kind of taking you guys through a 2-day kind of like expedited course on that, right? There'll be opportunities to network. There'll be opportunities for us to kind of talk a little bit about, the struggles of being a trader and all those other things you get when you go to those conferences. But you also will be leaving with a high level, you look at our concepts, how to apply them to your own personal trading, and hopefully leaving with a lot of gems that you use to really change your life potentially, right? And obviously we can't promise money, you being a winning trader or you being successful in the markets. Like that's things that are obviously one, we legally can't, but then also we can't promise those things from just a realistic standpoint, because that obviously depends on you, right? But I think coming to something where you're learning the tools, you're learning the trade, this is hopefully something that you guys will benefit from the long term. So if you're interested in coming to that, is obviously by no means it's by no means something that you have to come to. to get, some of the things. But I think if you want a very expedited opportunity to learn from, people that have really made thousands in the market, right, and can pull thousands out of the market pretty much weekly, or have pulled thousands out of the market weekly, it's something that you guys should really come to. So that's the first thing. Second thing, obviously, is going to be, the standard stuff. So you guys follow me on all my social medias. Again, Brinks Trades. I'm gonna hopefully hit this profile and it doesn't take me to my back end. It actually takes me to my actual profile. If you guys follow me on Instagram, this is Instagram Brinks Trades. You guys can see a lot of the stuff that I've done and do. I'm gonna be kind of putting a lot more content on here, and my TikTok. Again, tiktok.com/Brinks Trades is my username. But again, you can see some of the stuff that I've done in the past, right? So when it comes to passing funding challenges, when it comes to, getting funded from big firms like the Funded Trader. At that time, Funded Trader kind of has shut down since then, but I think they've came back. But Apex is a trusted funded futures firm. Funded Trader, getting payouts from them, getting passing challenges, other firms as well, right? Obviously, trade examples here, right? Like really showing you guys that, this is something that you can really do. Motivational stuff, interviews, all this stuff is there. So follow me, Brinks Trades. And then the last place, again, is going to be the Brinks Trades YouTube channel. So this is going to be where you can learn and be a part of like the free mentorship that I'm doing right now. So it's not going to be anywhere near in depth as what my paid mentorship students get. They also get more access to me. I think if you go to the summit as well, you'll get access to me like pretty much full time. So, I drop a lot of stuff in the chats for my paid mentorship stuff, like market outlooks, what I think is going to happen on a weekly, and obviously breaking it down to a daily level. Like this is what you should probably expect coming into today. So like a lot of that stuff is there as well. So if that's, a paid mentorship opportunity, if that's interests you, so let's see these comments. Massive congratulations. Thank you, Tony. So while I'm going to try and come to the best bring my sons also, inshallah. Yeah. I mean, honestly, it's a really good opportunity for you guys to, learn, right? And so, again, it's going to be based in the Miami area. You get a 2-day vacation coming to Miami as well. So that's always a benefit. I got a hold of Blessing last week and I had my first 100 simulated to funded. I'm going to bring the real withdrawal and save my family. Yeah, I mean, I think so. I think what you're saying is you have an account did you pass a challenge or did you get funded with the account? I'm not sure. Or are you taking a challenge or did you pass a challenge? Either way, it's great. It's a process, so take your time. I know there's a lot of people that, jump straight into trading and they don't necessarily have a lot of the experience, and it takes time to build the skill set. So don't think that, and that's obviously for Tony, but just anybody, like don't think you can just hop right in and do things, right? You're gonna lose trades, you're gonna win trades, you're gonna lose trades, you're gonna blow accounts in the beginning, you're gonna overtrade, you're gonna do all of the bad things that you shouldn't do as a trader, but are you learning from them day in and day out? And I think that's the most important thing. So hopefully this kind of inspires you, motivates you, and all that stuff like that. So if you guys have any questions at all, feel free to subscribe there, follow me there, join the Telegram chat. You can find it if you go to my social media pages. Follow me on social media. I'll be putting a lot more content over the next few weeks on social. So hopefully to grow that platform there. Probably some tips and stuff like that in between. So again, appreciate you guys. It looks like you guys don't have any questions. Okay. Yeah, I think I see what you're saying. I got to maintain and get withdrawals, no challenger goals. Okay. Wow, that's crazy. So take your time with it, man. Like how I usually approach funded challenges is, I look at whatever my withdrawal limit is. I try to break that up into like 20, or divide that by 20. So like if I have a 100K account, usually you can lose $10,000, right? Or somewhere around there. And so 10,000 divided by 20 is about 500. So that means each one of my trades, I risk $500, right? Or less, right? Like that's usually the max. is like 0.5% I'll risk. So it might be $300 or $400, but under that $500 for 100K account. And that way it kind of gets at least 20 trades, right? Because I could lose 2 trades in a row. I could lose 3 trades in a row. I've done that, right? My students, if you guys noticed, if you guys are in my Telegram chat, I actually posted 2 trades, and I'll post them in the chat, I think yesterday, in the main TickUps chat. But I took 2 trades on Euro on Thursday, Euro futures. The first one was a loss, and I got stopped out for $200 or $300. Maybe it was a little bit more than that. It might have been $400 or $500, something like that. But ended up losing $400 or $500 on the trade, and then turning around and making a $2,600 win on Thursday. And I posted that in the main chat, but I did that to kind of show, obviously, my mentorship chat, like, hey, I was early on the trades, and sometimes you'll be early, right? You'll take a trade, and you'll see the setup, you'll see what you think is going to happen, and you'll realize that you just were early, right? And you'll get stopped out, and you'll be mad. You might hate yourself. You might go through the, oh man, can I really do this? And then the second opportunity comes in and you get a huge win. So it's one of those things where you always should be protecting yourself, and you should always anticipate losing the trade. Like, what happens if you lose the trade, right? Yeah, I mean, making sure that you always manage your risk. Before you even figure out how much money you're going to make, you should be asking yourself how much money you're going to lose. And is that worth it? Can I lose this, right? Etc. So all those things. So I'll be posting a lot more content in my Telegram. Telegram, social media. Hope you guys enjoy this. So that's all I got for you guys. I appreciate the time, and I will let you guys enjoy your Saturday. Take a time out. It's Thanksgiving week. If you guys are in the United States, go enjoy life. Go do something fun. Spend time with your family. It's the holidays. The holidays are coming up, man. So, really use this time to enjoy life. So peace. Have a good one. Again, if you guys have any questions, you know where to find me on social media and Telegram. So have a good one.
Hey folks, what a view behind me. I'm at Blackpool Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackpool Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackpool Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.